Welcome to the Phoenix Prosperity Podcast, where wealth meets legacy. Join your host, Tim Fergestad, as we explore the journeys of Phoenix's finest to success and beyond.
Hello, this is Tim Fergestad. Thank you for joining us. I'm very pleased to have Jason Boyer with me here today. Jason is the president and founder of Boyer Vertical, an architect-led real estate development firm that integrates architecture, development, and construction under one platform. Welcome to the show, Jason.
Thanks for having me. Appreciate it, Tim.
Excellent. So how did you get into being a builder? I suspect you started from the design side. Is that right?
Yeah, so I'm traditionally an architect. I spent 30 years now as an architect. Went to school in the Midwest at the University of Illinois, and then came out to Arizona to go to grad school, and became an architect and was very successful at that. But have always been, had my foot in the real estate door a little bit.
Sure.
And so my path to expanding into what I'm doing today really came out of trying to diversify my risk and control more of the projects that I do today.
Yep. Okay. So that's I'm excited to talk about that. That makes sense. Was all that in Arizona once you came here for grad school and you just started working here? Because it's been a booming real estate market for decades.
As an architect, I've worked all around the country and even some international projects. So,
nice.
In 2022, I received my American Institute of Architects Fellowship, which is quite an honor. It's kind of a career milestone moment that
Congratulations.
Puts me in the among 3 or 4% of total architects in the country. So it's a really nice honor, and at the time when I submitted for that, I sort of felt I was transitioning into this world outside of traditional architecture into what I'm doing now, which is vertically integrated real estate development, where I design, develop, build, and manage, whether it's through keeping the products and operating them or selling them off.
Okay. Excellent. Before we double tap on all that, which I'm excited to hear about, I kind of want to know a little bit more about sort of like the international stuff that piqued my interest. So different countries have different rules for how things are built and other stuff. Is that particularly challenging? Does it depend obviously on the country?
Yeah, well, to clarify, my experience in the international side is tied to really institutional architecture work. So when I say institutional, I mean like universities, federal government work.
Okay.
So in this case, a firm that I was partnered with, we pursued work with the Department of State, doing embassy and consulate work. And that work took us to international locations to do those projects for the U.S. government. And so it's built to American standards, but with the complexities of working in a foreign country, and
sure. Okay.
and challenges with material availability and labor knowledge, things like that. So interesting is an interesting aspect of my career, but one that I've pivoted out of now, back into kind of full-time real estate.
Okay. So of the projects you're focusing on now, are those mostly the ones you're building now local? Yeah.
So everything I'm doing is in Arizona. Very kind of infill focused projects.
Okay.
So my space is, I fit in between, the onesie twosie, single operator owner and the big developers. So I'm typically going after the smaller infill properties.
Nice. That's
between
a great model.
4 and 50 units. And I'm also typically building new, which can be difficult, but it comes with a higher quality, higher level of knowledge of the product that you're creating, which helps in the in the disposition and long-term management side, because you get a chance to make value-add decisions along the way, geared toward whatever the business model is that I'm operating under.
Okay, very cool, very cool. And I imagine with infill models, and you have smaller ones, you can really pick some really good submarkets because, as we all know, real estate's very, very local.
Yeah, it's I mean, I often try to use a filter, which is simply I'll only do a project that I would live or work or play in as my filter.
Right.
And I've kind of followed that. I used to do single family rentals, and I've moved into multifamily and condominium infill projects.
Nice.
And it's always like I'm not going to do something that I wouldn't live in myself or put my family in myself. So we always kind of use that as a qualitative filter to some of the and that that shorts us out of a lot of our opportunities by doing that. But we just find that it's something that gives me comfort, and when I have comfort, I have confidence, and that confidence projects onto my investors.
Okay, sure. Plus, I personally speaking, I'm very detail oriented, and I've learned not to necessarily shoot for perfection, but high quality is very important to me. And putting out something that's below what I would like is a hard sell for me. So very similar, I think, mindset for that.
Yeah, it's the qualitative aspect's important, but it's a series of trade-offs, right? That you look at, and you just what I like about my model, which is vertically integrated development, is I view it more. I talk about it as risk alignment, in that I can control the design, I control the development. I'm the sponsor typically, so I'm putting significant amounts of my own capital into projects that I work on.
Right.
And then in 2020, I added construction. So I have a full KB1 commercial general contractor's license. And I did that so I could better control the risk. And so with the advent of COVID, we saw massive price escalation. And so in a traditional relationship where you have an owner, a builder, and an architect, three different sort of sets of drivers there. And so my model ties all those together in a risk aligned mode that financially motivates all three to be working towards a single goal.
Sure. Okay. Yeah, totally makes sense. Did this happen out of necessity? Were you designing and partnering with people who you started to realize you wanted more control, or the projects didn't play out the way they could have or should have?
Yeah, well, I'd say it was an evolutionary process. Like I've worked in having traditional contractor relationships, and in some instances that still may be the right model. If I get into projects that are above 50 units in scale, I would probably still hire a conventional general contractor.
Okay.
But in the infill arena, where there's a lot of unknowns and a lot of unique hurdles that pop up along the way, especially in development, it just adding construction just gave me some more. It's a tool. I look at I don't seek to build other people's projects. I build my own projects in an effort to minimize risk and maximize profitability.
Right. Excellent. And how big of a challenge was it when you started doing this in 2020 when COVID came?
Big. COVID threw up a whole bunch of unknowns to anybody in the market at that time. And, it was actually, I've got my general contractor's license in 2020 and started with the project, which was starting in COVID. And it proved to be a pivotal, decision to be in control of the construction, because I could pivot quick. I could find material choices. Like, we literally had to stop a project, reboot, diversify from a couple of subcontractors into several, and manage that process. So more work in the management, but we were able to hold the budget, which was important, and just pivot quickly. So, like I said, it's like I view the construction aspect as a tool in my belt, if you will, in order to execute on the work that I'm doing.
Sure, sure. Okay. So what types of projects or assets are you building?
So typically suburban and urban infill in core Phoenix metropolitan areas. So like I'll focus on Phoenix, Scottsdale, Tempe. I've looked extensively in Mesa, started looking a little bit in the Gilbert area, have been pursuing projects in Flagstaff, but all in Arizona. And I'll look at a dozen deals before one hits. Um, so there's a lot of work, that pre-work that goes into qualifying an opportunity before it becomes a real project and
Sure.
before I introduce it to investors.
Sure, sure. But what types of are you looking at? Are you building little if these are infill, smaller spot lots? Talk about the size and the product, please.
Sure.
Are these residential? Are they?
Often residential,
Mhm.
sometimes live work, and sometimes kind of boutique scaled office properties.
Okay.
And they vary in size between like right now I'm doing a custom residential spec in kind of the edge of Arcadia and PV, just because it's an opportunistic play at a
Mhm.
time when the market is land prices are inflated. And so that's unusual that I'll do a single family luxury build. Most of the time I'm doing infill residential, either for sale or for rent.
Okay.
I'm currently pursuing a 15 unit build to rent townhome deal,
Nice.
another infill deal near Camelback and Central area, which is 14 live work units. That kind of takes advantage of all the good things going on at that intersection of town.
Okay. So when you say live work units, is like mixed use, like you'd have like living spaces upstairs
Yeah. Like exactly. So you can work downstairs, you live upstairs. So it's more of a entrepreneurial type, small, loft like high bay space. So you can
Okay.
do anything from, run a professional office to a coffee roastery, or turn it into a car condo, or run a boutique gym or something out of that
Right.
space.
Okay, very cool. I like those are all great options. That's one of the neat things you can do, right? Being in your space is you're flexible and have the freedom to be creative in that way.
Yeah, well, creativity is important both in the product execution and in the structuring of the deal.
So, what size lots are you typically looking for or working with?
So again, it varies, but typically no more than 5 acres, and
Okay,
often as small as even less than an acre for an infill property.
right.
And really, location is what's the biggest driver for me. So I'm looking at established locations that have infill opportunities that I can leverage off of the success of other properties around it, that help
Right.
substantiate value and drive the demand.
For sure, for sure. Okay. So, what have been some of the bigger challenges in bringing the construction in-house?
Well, it's often I guess I would say the manpower side of it, the team side of it, because I'm not doing 25 plus $1 million properties. I'm typically dealing with smaller scale subcontractors, which
Yep.
can be less sophisticated in their business acumen. And that sometimes is a good thing, and it sometimes is a bad thing. But it often creates a little more work on my end, both to pre-qualify them in terms of their execution abilities and their financials, because I can't have somebody get them signed up under the contract and then they can't execute, right?
Sure.
it's often the people side that's the most challenging. What I enjoy is that taking on the construction aspect is it gives me a little bit more control and flexibility in the execution of the schedule and the product. And if I'm going along and I find an opportunity to pivot quickly into some aspect of change in the project that maybe responds to a market condition that's changing, right? Because in real estate, you're always looking to the environment's always changing around you, right? And so market conditions when you start and what you think they're going to be, and when you finish 2 or 3 years later, often have morphed. And so in my instance, I can pivot more quickly because I have construction in-house and do so without, onerous amounts of change order fees and things like that. I mean, I still have to pay myself, my team to do that work, execute that work, but we can do it. We can pivot quicker. We can make a decision quicker. And all that translates to getting to market quicker, which means we're leasing up or selling the product and getting, maximizing investor returns.
Right. Yeah, we've been doing similar stuff on our projects, on our townhome builder rents here in the Valley, for example. We're working with Lifestyles, which is the biggest builder rent company builder in the Valley. But trying to over the past 24 months, there's been probably over 75,000 units hitting the multifamily space, right? But the good news about
hot space, right?
The good news is the products you and I are just talking about right now are not really competing with two-story garden style 300 unit complexes, right? I mean, ours have, for example, a little yard and a garage, things like that. A 3-bedroom, 2.5 bath, 2-car garage townhome is different than a 2-bedroom typical apartment.
Yeah. It's important to have differentiators, right? And for me, my differentiator has always been the design side. So I'm an architect first that became a real estate developer because I had some entrepreneurial leanings into real estate. So, from day one, I've always owned some form of real estate. And then I've just sort of upgraded through that. I've done my own, fix and flips, and we own a variety of investment properties that kind of smooth out the income curve when you're doing projects. But ultimately, the people that buy and lease the properties that I develop are attracted to the design quality, the space, the way I incorporate the use of natural light. And you mentioned outdoor spaces; those are super important, right? Now that people have this sort of hybrid live-work lifestyle where they're not always in the office anymore, I think that's sticking around.
Right.
And so it's important that it's important that we pay as much attention to our homes, places we live and work, as we do to the cars that we choose to drive, right?
Yeah, for sure.
It's funny. I tell people sometimes it's like if you spend as much time thinking about your living environment as you did, which car you were going to buy, or you would think differently about it. And some people get that,
right?
Some people don't.
Well, your environment dictates a lot of your state, right? Your mental, physical, emotional state, and
it's
critical.
Well, for sure. Wellness has become a big thing, right? And it's even more so your mental wellness and acuity, and your relationships and all those things, and all that stuff becomes more important as we get older, right?
Yep. For sure. Okay, Jason. So how many of these projects do you build to sell versus build to keep and rent? And how do you bring your investors along?
Yeah, so I started the development projects. First development project I did was a 25-unit condo deal in Midtown Phoenix.
Okay.
It was for sale. And I had honestly probably no idea how difficult it would be at the time to do that. But in that instance, I created the design, worked through the development stack. Often I'm working in a LPGP model where I create a syndicated equity
Okay.
operating agreement that people subscribe to. And I'm often raising 35% equity and then getting 65% debt. I'm the sponsor, meaning the developer sponsor. So I'm securing the debt and I'm responsible for it. So if I have to sign for any kind of recourse, that's on me.
Okay. But you are structuring these as a syndication, not a joint venture with your investors.
Correct. Yeah.
Okay. So for our listeners, that means that Jason's taking on the risk and limited partners have limited control over the project, but they have limited liability, and which is what a lot of people are looking for, right? They want to be in real estate, but they don't want to have to do anything, and or they don't want to sign on the loan and things like that. So it's a great way to be involved.
Yeah. So it's a risk reward model for me, but typically. I'd say 80% of the time my investors reinvest in the next project. And so they've gotten good returns. Typically it's a 3 to 5 year hold, and they're getting anywhere between 75 to $1.25 on their dollar over that period of time.
Right.
So, if we can 2x, we're doing excellent.
Yep.
In that period of time. Sometimes it's less, sometimes it's more. It's just kind of situational, depending on circumstances of timing and whatnot. But one of the things I found is that I communicate on a regular basis with all my investors, and that's really important to them. I started with a traditional kind of friends and family group of people, and then that's morphed into a larger group, somewhat through introductions of the original core group, but also just through networking, meeting people like you on podcasts that either are interested or connect me with other people that might be interested in being a passive investor in that kind of real estate product.
Right. And yeah, that's a testament to your not just your competence, but your performance, right? I mean, referrals are how you grow, right?
Yeah.
If you're doing good stuff, word gets out, and people want to be a part of it.
Yeah, well, good. When I was a full-time architect, I used to say the best marketing we can do is our current work, right? So good work gets good work. So if you execute properly, that is the story, and you tell that story, and people will come.
Okay, Jason, because everybody likes a little tragedy. What's been like your nightmare project or your worst one? Can you share a little funny story about something, or painful story?
Yeah, well, they all have learning experiences.
Yep.
I will tell you that all of the projects that I've done as a developer sponsor have been successful, but they've come with a lot of ups and downs along the way. But in the end, it's successful. So it's all about how you manage those hurdles. Yeah. Before I go into the detail on that, I'll say the one time I've had an unsuccessful real estate investment was when I was an LP investor in somebody else's deal.
Okay.
And I didn't control what was going on.
Right.
So for me, it just kind of reaffirmed that I have a unique skill set as an architect that's led to me expanding into development and then construction. And all of those things combined, I think, is a sort of value add for people looking to invest with me, because I've seen a multitude of circumstances that I've worked through, both as an architect and then now as a developer. And development's a series of hurdles. I remember when I was starting out, the hardest part was raising money, because I didn't know how to do it. I didn't know how to ask for money, right? And I remember in my first deal, you asked for a pain point, right? That's what you're looking for. In my first deal, which is called Art House, it's a 25 unit condo deal in Midtown Phoenix. Um, I had it was like a private capital debt because
Okay.
it was one of my first projects out of the gate and I didn't have a tremendous balance sheet. And banks like big balance sheets, right?
Right.
So it was a condo deal and we got 8 units sold and we closed on those as soon as we could. We had 25 left. Well, that still remained a big part of the capital stack to pay off in terms of construction debt. And
Right.
so just to work through what was at the time a slightly slower market, had to get a loan extension, and I had a loan agreement
Right.
that had a lot of teeth in it at that time.
Yep. Yep.
And we just kept at it. And fortunately, I remember we sold a unit 3 days before that extension needed to be paid off.
Oof. Okay.
And then that was and it took a year longer to finish the sales of that project, and
Right.
that's some of the risks. The most recent project I just finished called Karma, we sold 9 of the 11 entry level luxury homes off paper while we were building them because the market
Okay.
was robust.
Yeah.
And that was great. But in the case of Art House, it took a little longer. So
Right.
be creative in terms of marketing strategies and just kind of hold on and try to moderate pricing to offset the interest carry during that period to hold your investor returns. But the differentiator was always the design quality of the projects, and that's why people bought and hold, and still 10 years later in some of those projects, the people that live there love it because of the sort of spatial quality of the
Right.
uh,
Okay. Okay.
but
Now I
I've
want to see
also
pictures,
seen.
Jason.
Say that again.
Now I want to see some pictures, Jason.
Yeah, well, I'm happy to share. I'm happy to share for sure.
I look forward to seeing them sometime. Okay, so okay, that's all great stuff. Is there been anything in the last 12 months that's changed your life?
Geez. What's changed my life? I find that I'm valuing things different. Like
How so?
I value my time differently now
Yeah,
than I used to. And I think some of that just comes with getting older. So
sure.
um, when I
Me
started
too.
Boyer Vertical, I did so that I finally got to a point in my life where I'm like I have enough um, skills and confidence to do whatever I need to do within my own abilities and not have to depend on somebody else.
Right.
Right? I don't have to work for somebody else, and it took 50 years to get to that point. And I've had a couple starts and stops in my career
Hmm.
where I was going into development and then I went back to traditional architecture. And those moments were always because like I was like, well, how am I going to pay for my family and
Hmm.
how I'm going to maintain, my retirement or, whatever the
Sure.
circumstances were. But ultimately I got to a point where I just realized like I can do this. I don't need other people to rely on because um, when I go into something, I go all in and I'm very focused. And I suffer, if anything, I suffer from the GSD syndrome.
Yeah.
You know what that is?
Yep. Yep.
The get shit done syndrome, where I'm good at getting things done, but sometimes I lose track of needing to be more strategic about.
Delegating it to somebody else because it's not
Yeah,
the best return on
for
your
sure.
time at this point.
Yeah. So I'm trying to make it that shift of realizing that it's a pain point for me. I can't, the model's not sustainable if I don't diversify
You,
and include others in
yep.
my framework, my business framework,
Right.
right?
Yeah, you've gotten the skills and the education, the knowledge and the wisdom of how to do everything. That doesn't mean you should be doing everything.
Yeah, for sure.
Okay. Okay. Yeah, that's a great point. And what's been sort of, well, let's say 2026. Can you talk about initiatives or any exciting plans you might have in the next year?
Well, one of the kind of strategic or epiphany moments I had coming out of my last deal was I realized that I needed to have three projects going at any one time to create a more sustainable business model.
And keep your construction machine running.
Yeah, it's that. It's just, there's different phases of projects, and it's different when if you're just a value add where you're buying an existing asset and then improving it and stabilizing it.
Right.
That's one thing. But when you're identifying a new opportunity, you're designing it, entitling it, building it, right? That lengthens the front end timeline, and those projects can take 3 to 5 years to go from start to stabilization.
And your crews find other jobs in the meantime and may not be available.
And so you need more. You need overlapping projects in that timeline in order to really, sustain the team.
Right.
Does that make sense?
Right. Yep. For sure. Yeah. Okay. Thank you, Jason. As we wrap things up here, I have a reflection question for you. I was wondering if you could share what you wish you would have known sooner about building wealth and success earlier in your career.
Geez. I guess I wish I would have bought more real estate sooner.
Right.
I didn't fully appreciate the complete picture of the benefits of real estate until I was probably in my early 40s.
Okay.
And so yeah, I would have. We've done pretty good in that realm, and I've done pretty well as an architect. But any wealth creation that we've built over time, which has enabled me the freedom to do what I'm doing now, has come from real estate.
Excellent.
And so that would be that's my own personal perspective on it.
All right. And Jason, if people would like to connect with you and learn more about what you're doing, where can they go? What should they do?
Yeah, so I have a website, boyervertical.com. You can see some of my work and connect with me there. We're actually in the middle of rebranding it, but you can connect with me there or through LinkedIn. Just search for Jason Boyer, and you'll find me there. And I always enjoy meeting new people, especially talking about real estate and wealth creation opportunities.
All right. Great stuff. Thank you, Jason. And thank you, everyone, for listening and watching. Jason Boyer for sharing your insights and your model for building wealth through real estate here in the Valley. Thanks, Tim. Appreciate having me on.
Inspired by our guests? Visit phoenixprosperitypodcast.com/guest and join us on the show and share your success story with Tim. The spotlight awaits.